back to the Rogue Trader podcast with me, Nick Leeson. Today we're talking markets, so we have the expert Jason Sen with us. I think over the last week or so, we saw markets trading within a range for a period of time. And then Donald Trump, as is his wont at the moment, kind of scuppered all of that, announced some tariffs on the EU, and the markets collapsed very quickly late last week. At the weekend, he's announced, or they've started to have discussions with Ursula von der Leyen, and these have been described as aggressive talks, or positive talks in terms of addressing those tariffs. So there's now a delay on those tariffs to the 9th of July, I think it is, and the markets have boomed back higher. So there is no consistency in terms of what Mr. Trump is doing. There's no consistency to the market. We're still getting whipped around from day to day, and a lot of that is depending on the comments coming from there. Issues with the Treasury yields as well. The 10-year Treasury yield is all over the place. But we want to touch on four different markets today. We've been following gold as a bit of a theme, so we'll go back to that. I think last time we spoke, which was about 8 days ago, Jason, we were looking at Bitcoin. You called that higher, the trend resuming. I think we got fairly close to about 112,000, and then that fell away with the Trump announcement of the tariffs. I think looking at Tesla yesterday, it was up 6%. So we spoke about that death cross and the JP Morgan announcement a good few weeks ago now. That was probably 6 or 7 weeks ago when Tesla was trading down to 190, significantly higher now. I wanted to talk to you about maybe where you would have got out of that trade because you were a buyer at the 190, 191 level. And then because it's results season and one of the Magnificent Seven is reporting later today, NVIDIA, I just wanted to get your thoughts on that. But if we start with gold, if you don't mind, if that's okay. I think last time we spoke, it was a bit of a tricky market, trading in a range, and there was no clear direction at that particular point.
Correct. Yeah, always tricky. Right, here we go. Let's have a look at gold. Okay, so it's all down to the bull flag. I've been talking about this bull flag pattern for a little while. It's been forming. It's over a month now. It looks like it's about 5-6 weeks old, this pattern. A bull flag is a typical pattern in a bull trend. It's just a consolidation. The flag is defined by the trend lines, the upper and lower trend line. So the idea is this is the flag pole here. There's the flag. Now, the problem is you don't know when it's going to break out of the flag. So yesterday I was actually getting short up here around the trend line. As you would do in the pattern. It looks like I'm looking at the 4-hour chart now. It looks like the moving averages on the 4-hour chart have acted as support. Whether that will now trigger a break above the trend line, it could do. The trend line's at around 33.45. Right. So we start getting up through 33.50. I would assume that the bull trend has resumed. This is a continuation pattern. It's a consolidation pattern, which means that you would expect gold to break up and then continue the move higher. But you don't know when. We may reject the trend line again. We may even come all the way down to the lower trend line, which is around 30. Well, it would be around the 3,000 area if we were to extend the whole move to the downside. Of course, at the moment it looks unlikely, but hey, with markets you never know, do you?
No, I mean that would be a big move back down to the 30 level. So, I mean, gold today, yesterday there was a bit of support around the 32.90 level, I think it was. Something similar again today, which is where you're seeing those moving averages at the moment and picking up off of those.
Exactly. Yeah, you got that right. Yeah, all of these moving averages have converged. That's the 100, the 200 and the 50 on the 4-hour chart, all converging to clearly offer a good support level. So, yeah, you're right. That would be the key level on the downside now.
Okay, so if we have a quick look at Bitcoin, when we were talking last time, you were expecting it to resume its upward trend. We spoke many weeks ago when Bitcoin was falling back down and was approaching that 74, 75,000 level, somewhere around there. But it did trade back all the way, and it was an aggressive, very fast-moving market last week. Traded very quickly back up above, to new record highs. touched 111, virtually 112, and then, as I said, fell back away with the tariff announcement on Thursday. I think it was last week.
Yeah, no question that Bitcoin's in a bull trend, of course. But yeah, pretty choppy lately. Not easy to read, not easy to trade, I don't think. Not for me anyway. But this is where we are. We retested the all-time high, which was just above 109,000, $109.71. Now, it's this trend line up here, as you can see, Nick, that is holding it, joining of the last two peaks. And it really is holding it incredibly well. I didn't think it would, actually. I thought we'd burst through it. But we've beaten 109,000, but we've only got to just short of 112,000. And the trend, it's all about the trend line.
So you'd expect more resistance up around those levels, but anything could happen from if it gets up there to test.
What I would say is if you want Bitcoin to go up, you need to see it through 112,000. Clearly that's the level to beat. If we come back down, as you can see, I've got a fib level around 103. We've got some congestion there from the price action as well. So that could be a good support level in the short term.
Okay. Then the next one, Tesla, if you don't mind. Tesla was up 6% yesterday. So when we were talking about that death cross weeks ago, and I think it was a piece of JP Morgan research at the time, and you and I both spoke about, sometimes when JP Morgan or one of those bigger players was coming into the pitch years ago, you kind of step aside. You were a buyer at that level around 190, 191. It might have been a little bit higher than that. I suppose one of the questions, which I think was a fantastic call, one of the questions I suppose I have for you, looking back at that, and maybe you could talk about where your exit would have been, because we're now significantly higher. Would you have been holding it all of that way through, or were there exit points for you along the way?
Well, I'm in this for the long term. It was actually in the low 220s where I was buying it. We didn't quite get down to 190, I don't think, but low 220s, and I've been buying it on the way up. I suppose this is probably another little bull flag pattern here, where I've got my cursor in between the 200, just up to the 200-day moving average. Once we got through the 200, we really burst up. We're now through the 100-day moving average and bursting up. Another consolidation phase here, which is probably a bull flag, and we've just burst up through there. So, we are recovering very, very quickly, and there's no reason for this not to continue. I think that we could easily, 385 would be the next target, which isn't that far away, just over $20. We may pause around there. There is a bit of congestion, but yeah, I think we're going to get there, put it that way.
Okay, so that's a hold for you, and continuing to accumulate, I suppose, along the way, as you have been.
Yep, I have. I'm holding it.
All right. The next one, which I imagine is a bit trickier, but you're just going to focus on the charts and what the charts is telling you in terms of the technical analysis. But that's Nvidia. So Nvidia are reporting later today. I think it's after the bell. It's probably been the biggest mover in this stock market or in the US stock market over the last 2.5 years. I think it's up 1,500% or something over that period. It's a crazy number anyway. They always, in most of the reporting or earnings and business reporting that they've done over the last couple of years, they always exceed expectations. I imagine that there's a lot of sentiment in the way that it trades. There'll be a lot of people looking at this and how it reacts today, and it has a bigger impact on the market. It's more widely used within the indices as well now. So just your views, targets, what you think may happen with Nvidia. I know it's a difficult call, especially with what's ahead today, but very current.
Yeah, I wouldn't like to call the number myself. This is really key, and it's a big pattern, so this isn't going to have a short-term effect, but a head and shoulders pattern is something that indicates a reversal in the price, and this is not a completed head and shoulders pattern, so I'm not saying that Nvidia is going down. But if you are seriously involved in Nvidia, if you're an investor, it's worth noting this is a typical head and shoulders pattern. So we've got left shoulder here, we've got the head, we've got the right shoulder. I don't know if you can see that, Nick. You probably know what a head and shoulders pattern is anyway. Yeah. So we would have to break the neckline, which is all the way down $85. So you're talking about a $50 drop before you even, hang on, excuse me. Someone's messaging me. I just want to shut that down.
It's probably the CEO of NVIDIA wanting to know what you think.
Yeah, maybe. Right, apologies for that. Let's get back. So you would need to see NVIDIA drop $50 before the pattern is even complete. So we're a long way off. The chances of the pattern forming are very low indeed, but I just want to make people aware because that would be very significant. Anyway, for now, we are approaching, well, the all-time highs really, aren't we? This would be key, this trend line here, 153. We're sort of in the upper area of the recent consolidation. I'm just going to do a rough trend line. This is roughly the middle of it, isn't it? Maybe it's a little bit above where the 100-day moving average is, the blue line. So we're in the upper portion of the recent range, which I guess is quite bullish. But it's kind of no man's land, really. If you said to me, where are we going, up or down? I really wouldn't know. We're just consolidating and moving sideways. So we'd either have to get down below 120 for me to be a little bit more negative in the short term, at least. Otherwise, we could push up and retest the highs on a good number, of course, and then 153. Yeah, that's the number to look for on the top side.
Okay. Well, look, there's every chance there's going to be a good number because that seems to be with the trend with NVIDIA's numbers over the last number of quarters. I think sentiment is improving as well. I think that's one of my observations. The markets are back trading above or slightly above the Liberation Day levels that we were trading at. It's crazy, when you think of all the damage that was done with that announcement and the volatility that spiked around that sort of period. It's all gone. Some people are saying that tariffs aren't having the impact that they did, but I think the EU announcement last Thursday suggests that there's still a lot of damage that can be done with these announcements. I think for me, it's just the lack of consistency. How you go from Thursday to Sunday, from having a 50% tariff to delaying that, and everything's back to normal, and we'll all forget about it. It is just weird, but those are the conditions that people have to trade at the moment. So I'm sure you're getting levels that are triggering left, right, and centre, and reversing fairly quickly when you see days like that as well. So it's very, very difficult.
Yeah, it's tough. I've been focused on the dollar. We had a bear pattern on the dollar. It looked like the dollar was going to sink. I was short, looking great yesterday. Huge jump in the dollar. So it's really jittery at the moment. It's hard to predict.
Yeah. All right. Well, Jason, look, thank you very much for joining us again today. We'll all be looking in on NVIDIA, see what happens with Tesla over the next period, and see if Bitcoin can go up and test those record levels yet again. If you are enjoying the content, which I know many of you are, please continue to subscribe and like, and we will be back talking to Jason again very, very soon. Thank you very much for joining us. Thanks, Jason.
Good luck with your trading, Nick. Cheers, mate.
All right, mate. Take care.